Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Let's start with Wall Street, where last week we saw this volatility continue in a major way for the week. The Dow was off 4.5%, the S&P 5.5%, the Nasdaq 7.5%. For the Nasdaq in particular, this was the biggest drop since the start of the pandemic in March 2020. What's behind this volatility? Is it the coming down of an inflated market, or what do you make of it?
I do believe that it's coming down of the inflated market. The core reason is the fear of continuing inflation in the United States and the fear of rising interest rates. If you look at the stock market closing at the end of 2021, so December 30th, Dow was 23% above the pre-pandemic high. That was the high in first quarter of 2020. S&P was 41% above the pre-pandemic high, and Nasdaq was 59% above the pre-pandemic highs. And I don't think the stock investors believe that represents the true value of the stocks and the stock indices. I think they believe that a lot of this rise was due to excess money supply, excess liquidity in the market, and now that excess liquidity is going to go away as the interest rates are poised to rise. So stock investors are amending their investment strategies. They're moving out of tech and growth stocks and moving into value stocks and bonds. Making this more complex is that inflation is higher than expected, and there's an increase in concern now that it may be longer lasting than expected as well. So the Fed, while arguing that inflation will return to normal levels once the supply and transportation bottlenecks work themselves out, it is still acknowledging that the bottlenecks and inflation may last through much of this year. And there's also a danger that inflationary expectations will rise, which will mean that inflation will be longer and higher. So markets are reflecting that. Markets are also waiting to see the results of the FOMC meeting later this week. They're waiting to see what the time schedule for the rate increases will be. The market seems to agree that the first rise will take place in March, but there's still some disagreement on whether it'll be 0.25 percentage point or 0.5 percentage point. And they're also seeing if the Fed gives some signal on when and in what way the quantitative tightening will take place. So they're right now in the wait-and-see position. European markets, DAX, CAC, FTSE, and Euro 50, they were all rising on last Wednesday and Thursday, but fell considerably on Friday. That probably reflects the same fear in the U.S. market as well, the fear of global inflation and rising interest rates. But in addition, they do have problems with Russia. There's growing tension between U.S. and Russia over Ukraine, and Europe is heavily dependent on Russia for natural gas and other fuels. The Asian markets, Nikkei and Shanghai, are following the U.S. Lead, heading downward. So both are rising slightly today. Hang Seng is acting contrary as usual. It rose last Thursday and Friday last week, but it is falling today, unlike the other two Asian indices.
And here in Korea today, too, the pain continued. Not a lot of volume like we had last week when people were selling and buying back in because of things like the IPO for LG Energy Solution. It seems quite clear that the Fed figures prominently in this situation. Tell us about the Korean market.
Okay, well, Kospi was down today by 1.5%. It ended today at 2,792.00. It hit below 2,800 today, and that is a psychological breaking point. So the people are very nervous in the market. Individuals and foreigners sold, institutions bought. And for the year so far, for January, Kospi is down 6.6%. Kosdaq, today it's down 2.9%. It ended today at 915.40. Individuals and institutions bought, foreigners sold. Kosdaq year to date is minus 11.8%. So Korean market is undergoing adjustment as well, like the United States. But the market participants seem to be waiting until the 27th. They're taking very conservative positions right now. On the 27th, we will have not only the U.S. FOMC meeting, but a lot of companies, Samsung Electronics, Naver, Samsung SDI, as well as U.S. Tesla, is going to report their fourth quarter earnings. Fourth quarter earnings are expected to fall. And then 27th is also the first day that LG Energy Solutions stock, which underwent the IPO, will be allowed to be sold in the market. The analysts are expecting the LG Energy Solutions stock to rise on the day and hit the upper limit of 30%. So until 27th, we'll probably see a very nervous market and probably very small volume as well.
Well, looking at the real economy here in Korea, in the fourth quarter last year, we see inflation and the prices of groceries up 4.7% from a year earlier. The biggest rise for eggs, which were up more than 36%. Rising also were tofu, cooking oil, orange juice, and so on. This was the on-year increase, but from the quarter before, prices came down. What do you see happening with the prices of these daily necessities?
Okay, well, these figures were gathered by Korea National Council of Consumer Organizations. They regularly keep a report on 38 categories of necessities, consumer necessities, mostly food stuff. And as you said, the highest increase took place in eggs. The council's numbers were for the 12 months, it rose 36%. That's roughly the same with the government numbers, which says that it rose by 33%. Note that the increase in price of food is not uniquely a Korean phenomenon right now. U.S. food prices are estimated to rise 5% during the first half of 2022, and food prices are rising in Europe as well. The council notes that the companies are quick to raise prices when price of raw material rises, but they do not reflect price falls when the price of raw material falls in their report, and that just seems to reflect that the Korean consumer market is perhaps not as competitive as it should be. There's a lot of non-competitive oligopolistic factors involved, but also as we saw in the case of ramyeon last year, because government often uses its influence to limit the price increases for consumer necessities during normal times, producers tend to hold prices over a long period, but when it absolutely can no longer afford to hold those prices, it tends to increase those prices by a lot. So what we need to see is not only the price increase that's taking place right now, but compare it to the last time when the price rose. For ramyeon, as an example, even though it rose a lot last year and probably will rise a lot this year, if we compare it to the last time that the prices of ramyeon rose, it actually rose around the level or somewhat below the levels of consumer price index inflation.
Well, Professor, this week you mentioned the Federal Open Markets Committee meeting. We'll also have the Bank of Korea with figures for GDP growth for last quarter and all of last year. One question is whether that'll meet the government's target of 4%. We'll know soon. What's on your radar in the week ahead?
Okay, well, the two biggies are what you mentioned, the Korean fourth quarter GDP advanced growth rates and the FOMC meeting. But there's a lot of other interesting statistics coming up this week as well. The Bank of Korea this week will publish January's consumer trends, business sentiment index, economic sentiment index, international trade indices and terms of trade, basically price index of exports and imports, and weighted average market interest rates. Those are all going to be very important for seeing what the inflation is going to be and what the trade is going to be this year. Statistics Korea will also have December and 2021 annual industrial trend numbers coming up on Friday. For the foreign numbers, for the United States, we have the Consumer Confidence Index. We'll see whether the American consumers are becoming more pessimistic as well. They also have their advanced GDP growth rate numbers coming up this week. And there's a lot of concern about inflation in the United States, especially on housing. And housing sales and orders numbers are coming up, and so is the numbers for consumer durables in the U.S. And the numbers which are most important for the Fed deciding on whether they'll raise the interest rate or not, the personal consumption expenditure and personal consumption and expenditure price indices will also come out this week.
Well, we'll look forward to having you on to tell us all about that, Professor. We'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.